The silver, we showed this earlier, but right there, silver to S&P 500 ratio, I mean, this is way down in terms of the undervalued to traditional equities. So for what we're seeing in the market space right now, many of this will, I think, go into, at least our audience is going to be looking for tokenized silver. We've already seen this with a handful of projects out there that are tokenizing gold, including XAUT and Pax Gold. So that's something that could really go forward. And I think this is the key. My prediction is we're going to see tokenized silver this year, Andy, and it may line up with what's happening in the market in general. But my question to you is the market cap. What is it for silver right now? Because it still seems to be an estimated market cap in comparison to what we do know about gold. Is there a true market cap for silver?
I think the market cap on that article that you're putting up right there, if I'm not mistaken, from the Silver Institute is full of nonsense, because it's giving you a market cap based upon all of the silver ever mined. The majority of the silver that has been mined since the beginning of time is gone. It's destroyed. Yep. It's in landfills. Yep. You use so little of it inside of whatever object it is that it's being, an iPhone or the first calculator that you ever used when you were a kid. The hair, it's all gone or blown up. In my opinion, if I had to guess, I would say that the true market cap of silver is far, 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 if we were to really let the price come out of silver's role in solar and EVs and electronics, AI data, all of this stuff, when you factor in the annual mining production of about 820 million ounces, which is already running well below demand of about 1.2, 1.3 billion for 5 years in a row, we've seen a structural deficit where, monetary demand and industrial demand is far greater than supply. I think you could say, depends what the price is. Let's put gold at $5,000. I guess you could say, if you put gold at $5,000 and you take the historical market cap, I don't know. I think you could see a real market cap of, doing the math, I don't know, between $2 and $6 trillion. It just depends upon, I think it would be multi-trillions. It depends upon whether it becomes both a monetary reserve asset and a irreplaceable industrial metal. The problem with trying to define the market cap, Paul, is price discovery has been destroyed. But I will simply say this. Right now, especially in the United States, I've been screaming about the amount of gold and silver that the countries around the world have been buying, such as Saudi Arabia, China, India, Russia. China is the second largest producer of silver in the world. They're flying all around Latin America, in particular Peru and Mexico. They're buying silver doré and silver concentrate, largely directly from the miners, paying double what the West will, sending it back to China to refine it. They're doing so to disintermediate the marketplace. But the amount of demand that we have seen where Russia is adding it publicly, they say we are adding it to our strategic stockpile. Saudi Arabia just took a huge position in it. India has bought between 700 and 800 million ounces over the last 6 years. All of these countries using the suppression of the Western paper price to stand for delivery. But what makes things so crazy is the amount of silver that is now coming into the United States. And in the first 3 days of the September contract, or first 4 days of the September contract, well over $2 billion worth of silver was delivered already into the COMEX, and we have the whole month of September ahead. That was last week. I haven't seen the numbers yet this week, but this has been every single month. As much as $4 or $5 billion worth of silver have been coming in minimum every single month since the beginning of the year. Big money in this country. And who is it? We don't hear anything about it. Same thing is true with gold. There are some very, very big money interests that are standing for delivery. And the real target of all of this is the LBMA, which is literally running on fumes. One more point to make on the LBMA. For a good portion of this year, the LBMA, in my opinion, has been teetering on default. Now, that's a big statement. The LBMA is a T+1 settlement market, where T is trade plus 1 is settlement. On the third day, those bars should be moving your way. The Bank of England tells us for most of the year that it's really about T to plus 6-8 weeks. Now, because there's a shortage of manpower and trucks, we're supposed to believe that the Bank of England doesn't have anything in the way of trucks or excess manpower to move the silver that belongs to these contract holders to where it should be going. it amounts to getting caught with their pants down. And this is a trend that we see accelerating, in my opinion. I think the market cap really, once price discovery rears its head, will be much higher than people think possible, much higher than the Silver Institute says. But the real flaw in their metric is by trying to figure it out based upon all the silver that's been mined, the majority of it's gone. Over the last 75 years, it's in landfills.
Well, and this is going to drive into what most likely will happen if you look back at gold and when PAX-G and then also XAUT launched. These are tokenized versions of gold. This is back in 2020 and 22, I think it was. And this is all expanded, of course, now to where gold is trading now at 3,600 all-time high. Point being is that silver has never had that kind of exposure. Based on what you're telling me, which is this somewhat thwarted growth of where silver could be going, along with now countries starting to acquire it, I just wonder if we're going to see a whole new DeFi ecosystem being built on digital silver, basically tokenized silver. So that could be huge.
Let me address that. Let me address that for a moment. First of all, silver's status as a Giffen good, meaning as the price rises, demand increases. That's usually not the way it is with assets, and making the shortages even worse. That is a big deal to factor into it. You know, look, silver's already up 43% this year, and the dollar's down 11%. 52 million ounces were delivered into COMEX this month already, with 3 weeks left. We have between a 5 and a 7% lease rate in London right now for available supply. It's normally 1% or lower. This signals that the big money, the retail investors, the big money, they're scrambling for real metal, not empty promises. And the big money above that are basically saying that your paper promises are crumbling for the industrial giants, the sovereign wealth funds, all these big money interests saying we're standing for delivery. And then a very quiet thing happened the other day. Again, this should be all over the news, but shh, don't tell anyone. The United States added silver to the strategic minerals list. It's now a strategic mineral. It is not just an industrial metal anymore. And so when you talk about numbers, when you talk about real numbers, silver has been one of the most suppressed metals or commodities on the planet for a long time, to the point where it's interesting when you talk about the military-industrial complex's role in it, and there's a fine line between conspiracy and reality. But look at the largest silver trust in the world, SLV, which is literally the largest silver trust or the largest one or two largest stockpile of silver in the world. It's run by JP Morgan and BlackRock. JP Morgan paid a $920 million fine to the Justice Department for suppressing the silver price a few years ago. The largest fine they had ever passed out. Now with BlackRock involved in it, who owns all of the military weapon manufacturers but BlackRock? They hold the price of silver down to make high-tech weapons, to sell them all around the world to NATO and all of the countries, to blow up places like the Ukraine, and then who gets the reconstruction contract? Oh yeah, it's BlackRock. Now, I'm just simply saying there is a fine line between conspiracy and reality, and the more you dig into what silver really offers and why 8 banks would step on the price of silver, this little tiny commodity, to the largest concentrated short position in the history of the COMEX market, it tells you that silver is far more important, far more critical than we are being led to believe by price alone. And when price discovery is allowed to manifest, because it is now being challenged by the majority of the other countries around the world, the big ones in the global south, they're like, you know what, we're going to stand for delivery, no more paper promises, and that's changing the narrative right here, right in front of us.
Silver starting to edge toward, right now, holding it around $42 as of today. Likelihood of this going to $50 this year, I'm kind of curious. Andy, do you feel like we might see that?
Well, yeah, you know, that cup and handle pattern that you showed is one of the most powerful technical setups you can find in markets. And for such a long time frame, 45 years of suppressed energy to be released. And it suggests that silver's been coiled like a spring. And if you take when you take the cup and handle, the cup is the long base. In silver's case, it's from the early 1980s peak of $50. Through the decades of consolidation, the handle is the pullback or the tightening of the range. And once price breaks above the rim of the cup, which is 50, the pattern signals a whole new up leg. If you take $50 as the rim and $4 as, or there, even a little lower, just around $4 as the bottom, you do the math, you get 46, 50 minus 4. Yeah. So the breakout above 50 plus 46 would be $96 to $100 would be the initial target. Do I think it'll bust above 50? Yeah, I do. It's quietly. In fact, on the futures right now, let's take a look real quick. The CME futures right now is 43.075. We are on the futures already at 43, and it's outperforming just about everything so far this year.
Yep, outperforming Bitcoin for sure.
Don't tell anybody. Nobody knows about it. And that's the craziest thing, Paul, is the lack of mainstream media attention.
Well, they're going to know about it now because we're talking about it here on this show for sure. I want to get into, because it has outperformed Bitcoin this year, we obviously outperforming many digital assets. If we do see, which my prediction, we are going to see a tokenized silver coming soon. If that happens this year, that's going to engage a lot more investors into it, which of course, to your point, is getting back to the idea of how and where delivery is going to take place around this. Let me go over to a tweet here real quick, because this is Peter Schiff, one of your buddies. Silver just traded 42. Gold is poised to break a new record. This is an unmistakable market signal that the Fed's upcoming rate cut is a huge mistake. Your opinion on that? Do you feel like that is the case right now with the rate cut coming in this week?
Yes, I do, because typically the Fed cuts interest rates into a weak economy with stocks well below record highs. I would argue maybe that the economy is weaker than people think with the job revisions that we've seen of 911 jobs revised. I mean, this is stagflation, right? But this is going to benefit the one percenters, right?
Exactly.
And because those who have assets should do very well. The last 3 times that we have seen rate cuts, we've seen gold and silver go up substantially. You know, the rapidly growing wealth gap only becomes larger, especially as core CPI inflation is back above 3% and the economy weakening. Bottom line, falling rates are a symptom of recession fears, nothing else. And I think recession, along with rising prices, you're going to reignite more inflation. The CPI is a bunch of nonsense. Inflation is closer to 11% than it is 3%. If you just use the metrics
my argument all along, Andy. I'm 100% on the same train of thought with you. I'm looking here at the top assets. Gold, approximately, you can kind of see it, 19 trillion. Nvidia holding up there. Microsoft, Apple, Amazon, Bitcoin, Alphabet. And then silver, if in fact this is accurate, but you're saying it could be much higher. This is very possible where silver could flip places like Google, maybe even take a run at Bitcoin, maybe even Amazon, if we start to see the price moderate, or I should say the price action go at the level that you're talking about in the next 6 months, which could be the trade of maybe at least the last several years in terms of performance. And especially, I think, again, if we get a tokenized silver, it's going to be huge.
Paul, I have tried for a long time. This is why I love talking to you. I mean, you're someone who has an open mind enough to listen to both sides. And this is the whole idea. This is why I brought Michelle McCory on. This is the whole idea that I have, is that all of our portfolios are stronger. Our understanding of monetary events are stronger. Our argument is stronger if we combine the two. It doesn't have to be just digital assets like Bitcoin. It doesn't have to be just physical hard assets like gold and silver. But I do believe that silver, in my mind, is the value of a generation. It would be very wise for people to, whether or not it outperforms in terms of its market cap, whether or not real price discovery finds itself, everything that they are doing to keep it blurred from everyone, everything they are doing to hold it down, everything that we are seeing on the LBMA should tell people who have done very well in the crypto space, take a little bit of that profit out, put it in physical metal, put it on the other side of the table, because largely we both see the world the same way. We do. And I think having something physical in your possession that is disappearing in nature, it is depleting in nature from 16 to 1 for 5,000 years down to 7 to 1, yet trading at 85 or 88 to 1 because of the stupid central or commercial and central banks that are suppressing it for the West's good. I don't know. I don't think you get a setup like this very often. And whether or not it outperforms or that's not the idea. The idea is this is a generational opportunity to take some profit from here and go to here and leave your initial bet there. I don't know. I just think it makes your whole portfolio a whole hell of a lot stronger when price discovery finds itself.
Andy, you've been watching this market for quite some time. I look at a couple of things that's going on in the market right now. I'm looking at SD bullion right now, which gets a look at the gold and silver play. And if you look at where gold and silver have started to go against each other, this goes all the way back into 2011 where we saw that dip. Are we potentially nearing that kind of movement in the market where silver is on the move upward? What's your current position?
Well, you speak of the silver to gold ratio, and that's a big one. I mean, look, let's go back 5,000 years. The geological ratio since the beginning of time has been 16 to 1, and it was that way for nearly 5,000 years. In other words, we'll call that God's ratio. You dig a big hole in the ground 5,000 years ago, and you would receive 16 ounces of silver for every 1 ounce of gold that you would pull out. And even Isaac Newton, when he was developing the ratio for the mint hundreds of years ago in the UK, 16 to 1 ratio. The average price ratio, we'll call that man's ratio, really since the Industrial Revolution, the average has been about 45 to 1. And that's been largely because silver's role as a industrial metal and gold's role as a monetary metal. And what's really interesting right now is that it's coming out of the ground, according to my friend Keith Neumeyer, who is the CEO of First Majestic Silver, that it's coming out of the ground at 7 to 1. It is disappearing. It's found in nature, like your skin is epidermis. It's found in nature in a form called epithermal, right near the surface. The big deposits were found forever ago. To me, what has happened is largely driven by central bank suppression of silver. And we could talk about this for hours, but what is really changing right now is the amount of silver that is being imported into the United States. I truly do believe that someone grabbed Trump by the back of the neck and said, we must start importing gold and silver. The rest of the world is on to what we have been doing. Now, they have been holding down silver, in my estimation, for a very long time due to the military-industrial complex's need for silver. It goes well beyond electric vehicles. It goes well beyond solar panels. I have a very good client who is a consultant for the Department of Defense who tells me that there is as much as 500 ounces of silver in the cone of the majority of the high-tech cruise missiles, let alone aerospace, let alone all of the high-tech components that are used in military. This is the reason why 8 Western banks, 8, have held the largest concentrated short position in any commodity ever traded, ever in the history of the COMEX, in silver. Year to date, Paul, we've seen almost 11,000 tons of silver that has come into the United States, most of it coming from London. The amount of silver available in London right now for delivery, the float is 155 million ounces, yet they are trading somewhere in the neighborhood of 600 to 700 million ounces every day. However, reports are that they only report the final settlement numbers, not the numbers of trades that go into that final settlement, which would put it as much as 10 times higher. In other words, they are trading anywhere between 600 million and 700 million. You can multiply that by at least 10 times. You're talking 3.5 times annual global mine supply every single day is trading on the LBMA with a float of only 150 million ounces. What could possibly go wrong? It's a big, big problem. And I would simply say to you that the gold to silver ratio represents the opportunity of a generation. And I mean that sincerely. I'm not trying to sound like a salesman. Truly, this is something that, look, this has happened this represents less than 1% of all of history, this ratio, which for 5,000 years was 16 to 1. Up at this level, anywhere near 80 to 85, you're talking like 0.5% of all of history seeing this kind of distortion. So yeah, to me, it is the trade and the value, the asymmetrical value, low downside, high upside of a generation. In other words, people who have gold would be wise to consider trading some of it into silver at this ratio. One last point. When I first saw something like this, it was 2010. It was the first time I ever saw it.
Yep.
And it was the first podcast I ever did with Bix Swear. And I told everyone at that point, look, I said, Bix, this is the second time in human history in 2010 we saw 85 to 1 ratio. I said, we got to tell everyone to sell their gold. I'll sell it to the market, convert it to silver. Many did. Within 7 months, you had just bypassed the 150 200-year average of roughly 45 to 1 to 37 to 1. So anyone who would have traded an ounce of gold in middle 2010 at 85 to 1, by mid-2011, you had $915 gold and $50 silver. That's 37 to 1. You could have traded back into gold with 37 ounces, way over doubling what you started with. So to me, honest to God, this is a gift that you only see once or twice, if you're lucky, in an investing career. So yeah, I think this is an anomaly of epidemic proportions.